Friends, this is Krishna Kumar presenting a video on Introduction to Customs Duty. Before going to that, the customs duty is an indirect tax levied by the government on import and export of goods. Now we enter into the concept of a Customs Act. Customs Act means an habitual practices. It means duty or tax imposed on import or export of goods. In this concept, we should be clear about the three important words, that is export, import and goods, for the purpose of levying the tax. Goods, that means your final products, your final consumption which is ready for the market. Either you have transfer or go for sales. So that point, goods is to be very clear. Next we come to the import for the purpose of tax. So the import have a different meaning in different dimensions. Coming to the Customs Act, import means what? Bringing the goods into India from a place outside India. Export means sending the goods from India to a place outside India. Let me repeat once again. Import means bringing the goods into India from a place outside India. Export means sending the goods from India to a place outside India. That is the import and export. Another term for the purpose of levying this Customs Act, we should know the India. Okay, the term India. Generally, in the world map, India means what? In general, that is the geographical boundary, that is the outline of the Indian map. It is, but for the purpose of Customs Act, it can be extended to the geographical line. That is, it can cover some coastal line also. So for these purposes, the Customs Act, from the point of a Customs Act, the Indian geographical line can be extended to 20 kilometers Indian territorial waters. That is, across the geographical line, it has extended to 20 kilometers for the purpose of a Customs Act. But generally, for the trade organization, signed by the World Trade Organization, the coastal line can be extended to 200 nautical miles of India. From the outline of the geographical area of India, it can extend to 200 kilometers. So, once again I repeat, from the point of Customs Act, the limit is 20 kilometer water line, but generally for a trade purposes, it has extended to 200 nautical water lines of the as per the GATT agreement. So now I think you have a clear idea about the term import, export, goods and India. So here, these things can be useful in the explained detail for purpose of levying in the coming slide. Next one, we shall move to the objectives of the Customs Act. What are the purpose? What are the basic aim the government of India has imposed a tax on a customs? So the following are the aspects. The first one is what? Safeguarding domestic trade, reducing import, revenue resources, protection of Indian industries, prevention of smuggling activities, to prevent dumping of goods. Let me explain one by one. First one, safeguard of domestic trade. The first and the foremost aim of the government is what? To protect the local industries, to protect the domestic trade. So for this purpose what they have to restrict the import goods. So in what way they have to be restrict? By imposing more tax, by fixing more charges, okay, by imposing a different types of indirect tax. So by that what they have restricted the importing goods from outside India. By that what there is a demand for the local product. By that the domestic industries trade will be increases. Second one, reducing import. Reducing import means what? So that is work for the economy, for the purpose of GDP, increasing the GDP, for the purpose of economic growth. They have to be curtailed, or they, we can say in the other way, for the purpose of balance of trade. Okay, when you get the favorable balance of trade, when there is more in export, less in import. So for to achieve the balance of trade, the government of India will reducing the import through the customs act. And third aspect, revenue resources. This customs act can be used as a revenue resources both from export and importing of goods. Next one, protection of Indian industries. Generally, if you go for all this type of taxes, it will boost the local industries and it will gain the growth of the local business. By that what the Indian industries can be protected. Then preventing smuggling goods. Another main objective of the Customs Act is what? To prevent the smuggling goods. So, to provide the necessary powers to central government to prevent a smuggling activity, they can go for the what? Customs duty. So by levying more and more rate of customs duty, they can easily control the smuggling goods from outside India. Next one, to preventing dumping of goods. So for, to ensure that the home markets do not become a dumping of goods of a foreign goods. So by levying more taxes, by levying the more rate of custom duty, they go for the dumping goods by way of increasing the customs rate. So these are the various objectives of the Customs Act. Next one important is levy and collection of a custom duty. So levy and collection. Levy means what? Imposing tax. So in the custom duty, the government will be imposing tax on what? On the part of the import and export of goods. So for these purposes, the government of India, the parliament will have under Article 246 of the Constitution of India, have empowered to levy and collection of a customs duty among the importing and exporting of goods. So for these purposes, they have the two aspects. One is what? The levy of duties of customs is regulated by the Customs Act 1962, while the rate and duties are fixed by the Customs Tariff Act 1975. So in these two acts, the government will be easily impose the customs duty towards the customers or towards the business, towards the trade. Next one, we shall move to the taxable event. So this is another important aspect, taxable event. So here we have discussed the customs duty means what? It is a tax levied on a import and export of goods. So here the import and export of tax can be actually happened. Then only the government has empowered to levy the taxes. For these purposes, they have measured the taxable event. That means what? Whatever the importing duty, it have the qualified for a taxable. It should not be smuggling goods. It should be in other way of a goods. Okay, it should be proper billing or proper mode of transport, whatever it is. That is a taxable event on the import duty. Similarly, the export duty means what? The goods can be qualified for levying the taxes. Okay, so for these purposes what? Let me explain again, come back to the previous one. That is, the import means what? Bringing the goods into India from outside country. So for these purposes, we have the three categories. That is what the geographical area of India, and we have the customs borderline, and we have the general borderline. So in the first aspect is what in the customs act. The first one is what the 20 kilometers from the geographical area of the water line. First category. Second one, for the trade, they have extended to 200 kilometers water line. So for this, take for example the importing of goods. Suppose the import goods can be enter between the 20 kilometers and 200 kilometers of a water, Indian territorial water. They can be considered as a import, and they have to be charged. The government of India will be levy tax on the that goods, even though they not entered into the country, entered into the India. Okay, because what, as per the law, once they have entered the border line, that is 200 kilometer of water line, they have to be in a position to get to pay the taxes. It is not matter whether they enter into the actual geographical area of India or not. Once they have crossed the cross the water line, that the Indian territorial water line, it is qualified for taxes. But for the export, okay, the goods can be taxable. The custom duty can be taxable. Only it can be delivered to the place where it outside India. Okay, let me clear that for the importing of goods, once they have entered into the Indian territorial water, it is compulsory to pay the duty. Whereas for the export, though they can across the geographical area or the water line, if they are not delivered, they are not pay the customs duty. So this is a major differences between the import and export. So import, once they have entered the water line, they have to pay duty. Whereas export, though they have entered the water line, but it is not delivered, means they are not pay the customs duty. So for this part, the taxable event is more important. That is a taxable event on import duty, taxable event on export duty. So for this, the levy on duty on import and export can be made. Next one, we shall move to what are the different types of customs duty charged as per the Customs Tariff Act 1975. The following are the various different types of customs duty. That is a basic customs duty, national calamity contingent duty, special additional duty of customs, additional custom duty, protective duties, countervailing duties on subsidies goods, and anti-dumping duty on dumped articles. First one, customs duty. This is a normal duty, that is a levy on the importing goods and services. The national calamity. So this is a special duty when there is occurrence of any national calamity. So in that period, in order to overcome the disasters or whatever the national calamity condition, they have to levy duty on the goods. Then third one, special additional duty of customs. Apart from the normal duty, in order to control the particular business or particular industries, they have to be imposed a duty on a specific goods in or specific industries. So that can be considered as what? Special additional duty. The next one, additional customs duty. This is also from the normal basic duty. They have levied additional for some purposes. Then protective duty, in order to protect the local industries. For example, if they want to protect the IT industries, so they have to be taxed more on the importing services of IT industries. So that is a protective industries. Next one, countervailing duty on subsidy goods. You know, the importing goods have subsidies from the foreign countries. When they come with the subsidy from the foreign countries, the customs duty has been charged more in order to balance this. So that is a countervailing duty on a subsidy goods. Next one, anti-dumping duty on dumped articles. So in order to dump the foreign goods or some other goods for the future rise of prices, the government has to be levy more duty on that goods. So these are the various modes in which the customs duty has been levied. Next one, we shall move to the classification. So the tariff act will be defined the various classification of goods. That is, they have to fix the rate. For that, they have follow the World Customs Organization rate, that is HSN, harmonized system of a nomenclature. So this is a catalog, this is a price index, internationally accepted catalog price or the price rate for levying the tax on a importing of goods. This can be followed globally. So it have the features. What are the features? It is the content of HSN that they will give the list, and it can be a multi-purpose nomenclature. Then they have pattern of it. They will give the coding, international coding for the goods and other purposes for levying of taxes. The next one, we shall move to the exemption from the customs duty. Okay, some depends on situation. The custom duty can be exempted in different modes, that is by way of a notification, by way of a special order, or general exemption and exemption to oil and other exemption. So this can be covered under the section 25 of the Customs Act. By then and there, by way of a notification, they have to implement all this. First one, exempt by notification. Okay, for general gazette, they have to be give the exempted. Next one, by special order. The time of a COVID, the government has give the special order to give the tax relief for the life-saving medicine. So by that word, they don't impose any tax on the importing medicine from the foreign countries. So that is for a special order. Then general exemption, common exemption from the list of the government then and there. Then exemption to the oil, general exemption. Then other exemption depends on the demand and supply of market. They have to give the other exemption. So with this, I will end this video. Thank you for patient listening. Thank you one and all.